I see the market received somewhat of a breather yesterday from the sell-off, up by just over 0.1%, settling at 20,625 points. Run us through the activity on the day. Seems like Ambrose isn't able to hear me there. Ambrose, can you hear me now?
Okay. Hello. Yes, I can hear you now.
Ambrose, as I was saying, a much-needed breather from the sell-off yesterday. Just run us through some of the activity and the key standout trades that we saw on the day.
Okay, basically yesterday at the close of trading, we saw a slight increase in the oil index, about 0.13%. This came in as a relief considering the last 6 days in which we've had continuous. The prices have been moving southwards. So we think it's actually a relief. But the question now is it sustainable? Is it something that's going to hold on to a long time? People are thinking that it's not going to be because this is just a spike.
So a temporary spike there, and also a temporary a respite for the banking sector in particular that has received a lot of selling pressure as of late. Let's just run through some of the results that we saw coming through from the conglomerate space. PZ Cousins reporting turnover up 21% year on year, but profit before tax really being hit by rising raw material costs, down some 50%. Weakest margins that we saw in 2.5 years, in fact, in the second quarter of the first half. To what extent are raw materials going to continually weigh down on earnings for PZ going forward?
Now, looking at the case of PZ, basically it's not just a standalone thing. It's affecting all the manufacturing industries in Nigeria. Most of them are running under high costs. The cost now, not just the cost of raw materials, but equally the energy cost. We have dilapidated infrastructure, we have high security costs. Now, specifically about PZ, the management has expressed that in their results, that the main cost for the reduction in their profit before tax, about 50%, and then profit after tax, about 57%, is mainly due to the high cost of raw materials. Now, taking a closer look, we realize that there is a 49% increase in the cost of goods sold, which means the cost of raw materials has been high. The way things are looking forward for the year, I do not think it will be lower than it was in the last period. Now, why am I saying this?
So basically, you're saying you're optimistic going forward that the second half is going to be a better half?
No, what I'm saying basically is that there's going to be a high pressure on manufacturing outfits in terms of their margins. Because looking at what we have in the country now and then making projections for the end of the year, the removal of the subsidy from the PMS is going to affect the cost of production because it's going to have a multiplier effect. What we'll have ultimately is that selling, distribution, and administrative costs will equally go up. This will affect the cost of the raw materials ultimately. And what they need to do basically is to see if they'll be able to pass on the cost onto the final consumers. Was looking at it too, we realized that their revenue was up by approximately 21%, which means they made more sales. But the pressure on the cost of raw materials is actually the cost of the dwindling fortunes in earnings of the company.
But still,
so there will still be a pressure on them
yeah,
to ensure that they make more profit within the year.
From a long-term perspective, though, the outlook appears to be more positive. You've got a JV with Wilmer International. They're looking to set up a palm oil refinery. How will that help PZ expand their product base and perhaps drive that revenue line?
Now, what that will basically do is that it's going to increase their sources of revenue. We all know that the arrangement they have, the JV arrangement, the 50-50 arrangement they have is going to increase. They're going to process palm oil in Nigeria. That means they will have their own raw materials, and then ultimately they will have enough to sell off to third parties. We expect that it's going to affect part of the cost of the goods sold. But what we're saying is that the raw material, the palm oil, which is there, will not be the only raw material they're going to use for the production. There's going to be an increase in the other cost of goods, in the other cost of raw materials, and there will still be a pressure on them to move. All they need to do is to devise ways of ensuring that these costs are ultimately passed on to their final consumers. And then with the diversification, I believe there's going to be enough, their performance is going to increase within the year.
Yet demand for the stock, despite all the pressures on the cost side, remains high. The stock sitting at 29 Naira is returning 11.5% on a year-to-date basis. So really an outperformer on the market. Would you be buying it at this level?
Yes, I will. I recommend that because ultimately, I'm not looking at a situation where they're going to declare a loss. They will still declare a profit, but it might not be significantly higher than what they've declared within this period. By the time they have their full year results, there will be an improvement in what they have at this point. Which means for those who are looking at companies with good performance, not necessarily the speculators, it's going to be a good buy for them.